Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. Risk disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott wave theory. In addition to my work as an analyst, I'm also an author and educator. I wrote Introduction to Elliott Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. First one is the consumer price index CPI related to Australia, and then GDP, gross domestic product, month on month related to Canada. Let us start with the first one. Consumer price index, also known as CPI. The date and time is February 25th, 12:30 a.m. UTC time. Now, what is consumer price index? The consumer price index measures the change in prices of goods and services purchased by households in Australia, reflecting the country's inflation level. It is one of the most important indicators used by the Reserve Bank of Australia to decide interest rate policy. A higher than expected CPI reading signals rising inflation and may increase the chances of interest rate hikes, which typically support the Australian dollar and push the AUD/USD higher. A lower than expected CPI suggests weaker inflation, reducing the likelihood of rate increases and weakening the Australian dollar, driving Aussie dollar to the downside. Now the event details. The date and time is February 25th at 12:30 a.m. UTC time. The previous number was 1%, forecast 0.2%. The actual number we got is 0.4%. The CPI data was released above expectations. The Forex market was forecasting a sharp slowdown in inflation to 0.2%, but the actual reading came in at 0.4%. Although lower than the previous 1.0%, the figure was still significantly stronger than expected. This reduced concerns about a rapid slowdown in inflation. As a result, Australian dollar strengthened after the news release and AUD/USD currency pair moved higher. The upside move reflected renewed expectations that inflation pressures remain firm enough to limit aggressive policy easing. Now, let me discuss market reaction analysis, and let me also show you the price chart of AUD/USD currency pair as well. The upside surprise triggered immediate buying interest in Australian dollar. Forex traders reacted to the positive deviation from forecast rather than focusing only on the drop from the previous reading. The stronger than expected CPI reading increased the probability that the Reserve Bank of Australia may remain cautious about cutting rates too quickly. AUD/USD responded with upward momentum following the release, confirming that inflation surprises continue to be a key driver for short-term volatility in the pair. The key drivers behind the move: positive deviation from forecast. Let me go back to the slide. The forecast was 0.2%, and we got a more positive number, which is 0.4%. Reduced expectations of aggressive monetary easing, short-term positioning adjustment in Australian dollar, and inflation remaining more resilient than anticipated. Even though inflation showed compared to 1%, the market had already priced in a much weaker number. The difference between forecast and actual drove the bullish reaction. The technical and sentimental considerations are: the post-release breakout confirms how sensitive Aussie dollar remains to inflation data. The short-term momentum favored buyers immediately after the announcement. Follow-through strength dependent on the broader US dollar sentiment and global risk appetite. So the bias shifted bullish immediately after the CPI release, or I would say after CPI surprise. The momentum favored upside on February 25th, and that was the main reason of getting a bullish rally in AUD-USD currency pair. So the CPI release came in at 0.4% above the 0.2% forecast, despite being lower than the previous 1%. The upside surprise supported the Australian dollar. So AUD-USD moved higher as Forex traders adjusted rate expectations. The final key takeaway is Forex markets expected inflation to slow sharply to 0.2%, but the 0.4% reading surprised to the upside. The deviation from forecast, not just the headline number, drove the AUD-USD price action to the upside. The next one is the GDP, gross domestic product, month over month. MOM means month over month related to Canada. Now, what is gross domestic product? Gross domestic product month over month measures the monthly change in the total value of goods and services produced in Canada. It provides insight into the country's economic growth and overall performance. So GDP is a key indicator of economic strength and business activity. A higher than expected GDP reading typically supports the CAD and can push the USDCAD lower, as it signals economic expansion and potential monetary tightening. A lower than expected reading may weaken the CAD and drive USDCAD higher, indicating slowing growth and reduced economic momentum. Now let me talk about even details. On February 27th at 1:30 p.m. UTC time, we got the GDP number. The GDP data was released stronger than expected. The market was forecasting a modest rebound to 0.1%, but the actual figure printed at 0.2%. This reading not only exceeded expectations but also marked a clear improvement from the previous 0.0%, signaling renewed economic momentum. Following the release, USD CAD moved lower as the Canadian dollar strengthened against the US dollar. Let me show you the price chart of US dollar versus CAD currency pair. The upside surprise in GDP increased confidence in Canada's economic recovery. Forex traders reacted positively to the stronger growth data, buying CAD and pushing USD CAD to the downside. The stronger than expected reading also influenced expectations regarding the Bank of Canada, as firmer growth may reduce the urgency for monetary easing. The key driver of the move was the positive deviation from the 0.1% forecast, which triggered immediate downside pressure in USD CAD currency pair. The important drivers behind the USD CAD move is the GDP printed at 0.2% versus 0.1% forecast. clear improvement from previous 0.0% stagnation. If I go back to the slide, the previous number was 0.0%. So that's a clear improvement from previous 0.0% stagnation. The current number or the actual number we got is 0.2%. So stronger economic momentum in Canada and adjustment in interest rate expectations. That was the main reason behind the price action in USD-CAD currency pair. Initial volatility was strong when the actual GDP number came out, which is typical during the GDP announcements. Breakouts or quick directional moves occurred as liquidity adjusted to the new information. I would say short-term bias shifted to the downside, but after the data, market tried to rise back up in USD-CAD currency pair. The overall analysis is the Canada's GDP came in at 0.2%, exceeding the 0.1% forecast and improving from the prior 0.0 reading. The stronger than expected growth supported the Canadian dollar and pushed the USD-CAD lower after the release. The final key takeaway is the positive deviation from the forecast was the main catalyst for the downside move in USD-CAD currency pair. Let me go back and show you the price chart of USD-CAD. So basically what happened, if I go over to the 27th, this is the daily time frame candlestick. And let me see if I could draw an arrow over here, right over here. Okay. So on 27th February, we got the move to the downside in USD-CAD currency pair when the actual news came out regarding the GDP. Now, as of today, USD-CAD is trying to rise up. I will talk more about USD-CAD in a few minutes' time. Now, let us take a look at okay, so previous week global market trends. So first one is the euro dollar, second one is the US dollar Swiss franc currency pair. So let's start with the euro USD first. If we take a look at a price chart of euro dollar currency pair, I can draw a simple nice trend line over here, and let's change the color to blue. Okay, so we got a break to the downside in euro dollar currency pair, and the way I see euro is probably going to drop a little bit more. Next one is the daily time frame. I was expecting a drop in market, and the way price action is falling down, we have a support down over here. Okay, let me also write it down the exact level. So the low value is 1.1577. So let me write it down, this number, 1.1577. So here's the level. Now the euro USD is falling down, but we need a break over here. So if price action is going to show us a breakdown below 1.1577 area, then we expect further weakness in price action of euro dollar currency pair. Okay, otherwise this market could bounce back up as well. This is also possible. Next one is the US dollar Swiss franc. As far as the trend is concerned, it's still a downtrend going on inside US dollar versus Swiss franc currency pair. as shown by this nice bearish trend line. Daily time frame, I was expecting a bullish leg in US dollar Swiss franc, and we got it. In Swiss franc, this is the high level right over here. And we can also write it down, the exact level. So 0.8040, this is the level. If the price action of US dollar Swiss franc currency pair is going to break above this area, then the chances are it's going to rise up even further. Next, let's go over to the current week macroeconomic events and data releases. I will be covering the key developments in Forex market with a focus on fundamental analysis. The first important financial news announcement is GDP, gross domestic product, quarterly report related to Australia. So today is March 3rd. So these are the upcoming news events. The first one is on March 4th at 12:30 a.m. UTC time. The second one is German factory orders month over month related to Europe, and the date is March 6th, 7:30 a.m. UTC time. So let's start with the first one. Okay, what is GDP? GDP, also known as gross domestic product. Q over Q means quarterly, quarter over quarter. It measures the quarterly change in the total value of goods and services produced in Australia. It shows the overall growth of the economy and provides insight into economic momentum. A higher than expected GDP reading typically supports the Australian dollar and can push the AUDUSD higher, as it signals a stronger economic growth and potential for tighter monetary policy. A lower than expected GDP reading may weaken the Australian dollar and drive the AUD USD to the downside, reflecting slower growth and reduced likelihood of interest rate hikes. As far as the GDP numbers are, the previous number we got 49.3. The forecast is actually not good. The forecast is 49.1. The actual data not yet released. The currency pair we're going to focus is the AUD USD currency pair, also known as Aussie dollar currency pair. Now, let me talk about market context and pre-release expectations. The forecast of 49.1 is slightly lower than the previous reading of 49.3, suggesting expectations of modest slowing in Australia's economic growth. Market participants are watching for any deviation from the forecast, as it could trigger notable AUD USD movement. If the actual GDP comes in above 41.1 number, it may indicate stronger economic momentum that anticipated, boosting confidence in the AUD or Australian dollar and potentially pushing AUD USD currency pair to the upside. A reading below forecast would signal softer growth, which could reduce expectations for Reserve Bank of Australia rate hikes and put downward pressure on the Australian dollar. Now, let me talk about the reasons that why AUD USD currency pair could move. As far as the price chart is concerned, let me go back to the price chart. This is the daily time frame of AUD USD currency pair, and it seems to me price action is trying to move sideways over here, also trying to print a top over here. If you go over to the 4-hour chart, and here's a support area right over here. Now over here you see a market keeps trying to rise back up and then falls back down, so it's actually going nowhere. It's kind of a sideways market. So these things usually break to the downside. That's what I say. So my forecast on the technical side is actually bearish. Let me go back to the PowerPoint slide. So the key factors regarding the GDP is that may drive post-release movement include actual GDP versus forecast and previous reading, market expectations for Reserve Bank of Australia monetary policy, broader US dollar sentiment, and global risk appetite, short-term positioning ahead of the release. The technical and sentiment considerations are Australian dollar versus United States dollar is expected to see heightened volatility around the GDP release. Price action may react sharply to deviations from the forecast with momentum amplified by liquidity at the time of the announcement. Forex traders should watch both the headline number and market sentiment for cues on follow through direction. The trading outlook is, I would say, pre-release is the upside if GDP exceeds forecast, supporting the Australian dollar strength. The downside if GDP is weaker than expected, pressuring the Australian dollar. Short-term volatility likely around the financial release time at 12:30 a.m. UTC time. So tomorrow we're going to get this news, the financial news regarding the AUDUSD currency pair. The overall analysis and key takeaway is GDP Q over Q is a key measure of Australia's economic growth. Even a small deviation from the forecast can have a significant impact on AUD USD currency pair. So forex traders should focus on how the actual number compares with expectations, as market positioning and sentiment often drive the real price reaction. The forecast GDP is 49.1, slightly below the previous 49.3 number. So traders should monitor the release closely, as stronger than expected growth may push the AUD USD higher, while weaker data could lead to declines. The next one is the German factory orders month over month in Europe, and we're going to focus on Euro USD currency pair. Now, what is German factory orders? The German factory orders month over month measures the monthly change in the value of new purchase orders placed with manufacturers in Germany. It is a leading indicator of industrial activity and overall economic momentum in Europe's largest economy. A higher than expected reading typically supports the euro and can push the euro USD higher, as it signals rising demand and future production growth. Conversely, weaker than expected data may weaken the euro and drive euro USD lower, reflecting slowing industrial activity and reduced economic momentum. The financial event details: German factory orders month on month in Europe. The date and time is March 6th, 2026 at 7:30 a.m. UTC time. The previous number was 7.8%. Forecast is negative 3.8%. The actual number is going to release on March 6th. Now, let me talk about market context and pre-release expectations. The forecast of minus 38% is significantly lower than the previous positive reading of 7.8%, suggesting expectations of a sharp slowdown in factory order growth. Forex market participants are focused on this data as a gauge of Germany's industrial sector health and its potential impact on the euro. If the actual reading comes in above the forecast, it may indicate stronger than expected industrial demand, boosting confidence in the euro and potentially driving euro USD higher. Well, if you take a look at a price chart of euro dollar currency pair, it's actually trying to go down over here. So, and the forecast expectation is to get a minus 38% number. That would signal further contraction in the economy, putting pressure on the euro and likely pushing the euro USD to the downside. Well, it's already falling down. Why euro USD could move? Key factors that may influence price action after the financial release include actual factory orders versus forecasts and previous reading, market expectations of European Central Bank monetary policy and broader US dollar sentiment and global risk appetite. Euro USD is expected to experience elevated volatility around the news release time. Price action may react sharply to deviations from the forecast, with momentum amplified by liquidity at the time of the announcement. Forex traders should monitor both the headline number and market sentiment for indications of follow through direction. The trading outlook pre-release is upside if factory orders exceed forecast, supporting the euro strength; downside if factory orders are weaker than expected, pressing the euro; short-term volatility likely to increase during the release news time. Overall analysis and key takeaway is German factory orders month over month is a key indicator of industrial demand and economic momentum. Even a small deviation from expectations can create significant moves in price action of euro USD currency pair. So, currency traders should focus on both the actual number and the market expectations, as sentiment and positioning often drive the real price reaction. The final key takeaway is forecast factory orders minus 38 minus 3.8%, and the previous number was the positive number 7.8%. So traders should monitor the release closely. Stronger than expected industrial demand may lift the euro dollar, while weaker data could weigh on the euro. Next, let us talk about current week market trends. I'm going to discuss about the euro USD and AUD USD currency pair. So let's go over to the price chart. As far as the euro, as we discussed earlier, euro dollar is trying to print a top over here. Here's an ugly looking candlestick right up over here. So the way I see price action in euro dollar currency pair is probably going to drop. We might get a retest of this trend line, and then euro is going to drop further. That's the long term forecast. As far as the daily time frame is concerned, as long as price action is staying above 1.1577 area, we could expect a bullish lag in euro USD currency pair. Okay, so I would say 1.1577 area, it's kind of a pivot level or a pivot point. So if price action breaks it, then expect further weakness in price of euro USD currency pair. Next one is the Australian dollar AUD USD currency pair. This was a bullish breakout in AUD USD currency pair, and as far as the daily time frame is concerned, price action is trying to go nowhere. In 4 hour time frame, here's the support. Let me write it down, the support level. So 0.7061, this is the support level in 4 hour time frame of AUD USD currency pair. And so far price action is below the support area, and the way I see it's quite possible that market is going to drop even further. Next one is the US dollar versus Canadian dollar currency pair. USDCAD, this is where we got kind of a false break to the downside. So the way I see USDCAD is most likely going to rise up. As far as the daily time frame, it's trying to move up over here. Next one is the spot gold. Okay, spot gold weekly time frame, the trend is up. As far as the daily time frame, this was a bullish trend channel which I discussed last time, and the way I see price action is trying to fall over here, I would say. So if we do get a drop in price action of XAUSD pair, this is the spot gold chart that I'm discussing, the daily time frame. So it looks quite possible that spot gold is going to start the decline, but we need to wait for the actual uh, candlestick body to close below uh, these rising trend channel over here. So here's the support area in spot gold over here. So if price really wants to go down, then we should get a bearish candlestick close below this support area. Otherwise, it could go up again. If you have any questions or comments, feel free to type inside the chat box and I will be happy to answer your questions. Now, let me take a look at the chat box. Okay. What's your analysis for oil? Okay, let me discuss about the oil over here. I think I do not have oil over here. I have stocks, ETFs, indexes are there. I don't have oil chart over here, but I can tell you verbally that the way the oil is moving, I think we are going to get an increase in price of oil, at least on a short-term basis. Okay, the next question was, what is the difference between technical analysis and fundamental analysis? Well, I would say in forex trading, both technical analysis and fundamental analysis uh, helps you decide when to buy or sell, but they focus on different things. Now, the technical analysis basically is the study of price chart, and we focus mainly on candlestick patterns, support and resistance, trend lines. Uh, People even use a different kind of chart patterns like breakouts, trading ranges, reversals, uh, and we can even apply some technical indicators as well. As far as the fundamental analysis is concerned, it is basically the study uh, to talk about the economic events behind the currency movement. And the focus is mainly on the interest rate decisions, the inflation, the CPI, the gross domestic product, unemployment data, employment data, central bank decisions, political events, things like that. So I hope I answered your question. How does GDP affect the market? Well, the gross domestic product basically measures the total value of goods and services produced in a country. So it shows whether the economy of that particular country is growing or slowing down. Now, since we are looking at price charts of forex pairs, we are basically looking at the currencies. So each country represent a currency. Okay. So when GDP comes out higher than forecast, it usually means, I would say, economy is growing, businesses are performing well, employment may improve, inflation pressure it could increase as well. So because of this, the central bank may consider raising interest rates. Okay, and if the GDP number is weaker than expected, then it signal economic slowdown, lower business activity, and possible recession risk in the economy. So I hope you got the idea about that. The next one was German factory orders also affected by war today. Well, as far as the technical analysis is concerned, in technical analysis, we do not care about uh, you know uh, these things that you discuss. But as far as the fundamental analysis is concerned, then yes, German factory orders can be affected by war and geopolitical tensions, but the effect is usually indirect, I would say, and takes time to show up in the financial data rather than being a simple immediate cause and effect like a GDP beat or miss. Okay. So, a war can disrupt supply chains, logistics, and demand for certain goods. Okay. So, what we have learned today, we discussed about the GDP related to Australia, and our focus was on AUD USD currency pair, and we also discussed about the German factory orders month over month related to Europe. I also discussed about the Euro USD, AUD USD, and USD CAD pairs. So these are the assets to watch out for profits. What you should do next? Well, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. And if you want to learn more about trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, March 10th, 2026 at 12 p.m. UTC time. So that's pretty much it for the time being from my side. Have a nice day and bye bye.